Hey everybody, it's John back for my second video. Got some good feedback. That I say too much so I'm going to try to limit my in this video, but it's really hard because sometimes I just don't know what to say, so I fill it with Anyway, uh, thanks for the feedback. Hope you all got something out of the first video. Second one was today. We all know today as Nudie Magazine Day. No, just kidding. It's FOMC Day, which is almost as good as Nudie Magazine Day. It is if you're catching the right side of the massive, massive swings we saw going on today. But prior to the FOMC release at 2 o'clock, and after I woke up from sleeping, I'm currently working nights. I made a nice little trade. I'm going to go through on some SPY contracts. I bought 6 SPY contracts right here at the arrow at 123. We had a nice little run up and a small consolidation, and I felt like we were going to run up until the 2 o'clock time, which we did. There was good volume. The pattern was nice. We had a nice little dip. The bottom wicks, the John Wicks, as I've been told I should start calling myself, but I'm pretty sure that's already copyrighted. So we started to run up. I got my entry at 382.20, my stop at 381.94. Those corresponded to a contract price of 125 and a stop loss of 100. I bought 6 contracts. A lot of people would put, according to the strat, you would use the highest of the last highest candle before the drop if you're buying a call. So I could have set my first profit zone here, but I liked going back to this resistance, this support area over here, which now could have turned resistance, which we did see a little stall. So I did pick a nice first profit taking area that was a little bit higher than I would normally take, but it paid off. So I'm really happy I did that. I sold 4 of the 6 contracts here. I think it was I bought them. Oh, I forget now. But anyway, we'll go over that in a minute. I'll show you the exact prices of what I did. So I entered here. I was green the whole time, nothing in the red, which is what we like to see. No scares, not close to hitting my stop. Took my first profit zone here. I sold 4 of the 6 contracts, and I left 2 runners for the possibility of a massive run from the FOMC, which is exactly what happened. However, always learning, always could be better. I forgot to take out my stop loss. So when this massive run happened, this wick came all the way down. This is a 5-minute chart. On the 1-minute chart, you would see that it did tickle my stop loss, and I sold right at $100 a contract. So that's why you take profit and leave runners. I could have moved my stop loss up to my entry point just so I wouldn't have lost any money, but I kind of wasn't really paying attention. Like, oh my gosh, it's already 2 o'clock. I had just woken up from sleeping, and if I would have realized that, I would have taken out the stop altogether and just seen if it, or at least moved it up to my entry point. That way, my loss would have been 0. Instead, I lost $50 on the 2 contracts that stopped. So we'll look at that right now, anyways. So you can see I bought open the 6 contracts for $87 a piece. It was. I sold at 120, and the 4 of them I got stopped out at 100. So the overall profit of the day was $82. It could have been tremendously more if I had not stopped myself out, which I got to get better organized. Here we are. If I would have been not stepped out, this rallied all the way up to 387. That would have been a nice little cash in right there, but I messed it up, and whatever, I'm still in the green, up $82, because let me show you what happened the rest of the day. So here we, at the 2 o'clock hour, instantly shot up. After the 2 o'clock hour, We had what would be expected normal, a nice little retracement. When you're looking for a retracement and another leg up, you're looking for a 45-degree angle down. And that's almost exactly what you get if you kind of do line of best fit. It's about a nice 45, and you can see a huge bottom John Wick coming back up. And right here, you're like, oh man, I'm super happy I stayed in. This candle goes up even further, bottoms out, ends here. This guy looks like, hey, we're going to continue the leg up, and then the bottom just falls out of the market, and it just tanks from there. That is a catastrophic loss for anybody who stayed in too long and did not sell. You can see here at about, I don't know, 345-ish. S&P's down 2%, NASDAQ down 3%, Bitcoin down 1%. You really didn't even give VIX a time to fully adjust to the catastrophic nature of everyone who got face rolled thinking they were going to make bank and just held and held. And that's the problem you run into. When you don't take profits and you stay in a trade, you've already seen the maximum amount that you're going to get. But your psychology says, I want to get back to that point. I want to recover the profits that I've lost. And this guy gives you a false sense of hope, right? And then this guy slams you in the face. And then you get a false sense of hope. And then it's like you have Bruce Lee, 1 nut kick, Chuck Norris, 2 nut kicks, and you're just rolling around on the floor in agony at this point because you've just crushed yourself. Take your profits when you should take your profits. $82, whatever. I could have lost, 800 if I would have stayed in praying for a turnaround. So take your profits when you take them and be happy with what you got. So in case you were interested in the indicators that I use, the BT cloud is what shows the reversals, these green zones and these red zones. It gives you the fatter and the deeper the green or the deeper the red indicates kind of the farther you are away from the mean, the deeper the push or the higher the rise. So it gives you a good indicator when these flip from green to red that you're going to have a reversal in progress. So right here at this entry was a red to green flip, and that was a really nice trade. I was happy with it. The only thing I messed up was not taking out my stop loss. So that's what BT Cloud does. This is the author. You can get these on TradingView. Candle type, the Strat by Crinklebind. This is what gives me the numbers of the 222s, the 1s and the 3s. I'm going to explain those on a later video and just talk about the Strat. The EMA is the rolling moving averages, the 9, the 14, the 50, and the 200. The 50 and the 200 are the big ones. The 50 is the light blue, and the 200 is the white. When you get the 50 coming over the 200, that's what's known as a golden cross. That's a great thing. It means the market's moving up in the direction you want it. When you get the 200 moving below the 50, that's called a death cross. And that is really bad if you're in calls, great if you're in puts, because the market is on its way down. The John Carter pivot points I explained last video were these blue zones. This fat one is always the neutral. Then this would be the midpoint between the neutral and S1. You can see right here, it didn't quite come down all the way, but these points are awesome for turning momentum. Right here, we had a wick there, we had a wick there. We'll come up. Are we going to go up or go down? We go down. This would have been an amazing entry point, but it's too close to the beginning of the day to really... beginning of the day plays are tough. Awesome reward, but big risk, because it could flip in a second on you. But this was the play of the morning, just to take that right down. The VPVR, the pseudo, that gives me lines, Fibonacci's to use. They're also nice things to put price targets off or to get inflection points off of bounces. And the tick shows the relative strength of a move. The fatter and the deeper the color of these reds and greens, the more volatility in the move, the greater the greater the volume push. And anything that kind of hangs out between plus 400 and minus 400 is a stay away. And when you get good pluses up to the or good moves up to the white dashed line on either side, it's plus 1,000, minus 1,000. Those are heavy volume plays, and you typically want to be on the right side of those, or you're getting face rolled. So anyway, that was my trade from today. And remember, take your profits, because when you don't, you get kicked in the nuts. All right, everybody, take care. Bye-bye.